Hey guys, and welcome to another YouTube video. In this video, I will walk you through the biggest trade I took this week, and that was a supply setup, A plus supply setup I took on ES futures. I think that was on Wednesday, and in this video, I will walk you through all the steps that are required to take such an A plus setup. Let's hop on the trade. I will start sharing my screen with y'all. Alrighty, so what was the first step I took when I opened the chart on Wednesday? I did my pre-market analysis. I always start with a higher time frame, like daily, 4 hour, 1 hour, sometimes even on 30 minutes / 15 minutes. So what you want to do on these higher time frames, you want to mark out all significant support and resistance areas. Any levels you see huge reactions, this is what I always do before I even switch to the 15 or 5 minutes, which is a time frame I always take entries off of. I always look for, as mentioned, important areas of any reactions like support, resistance. So I marked it out prior to this trade. As you can see up here, this was a significant resistance area on 1 hour, and then I marked out this lower resistance area also on the 1 hour. But the price at that point when I opened my chart was far away from both zones, so I was really feeling confident in taking a supply setup because the price was not close to either one of these zones. The second step was to determine my short-term bias. As you can see, in this area, the price was selling off like crazy. So obviously, short-term bias on a 5-minute and also on 15-minute was bearish. And then after you marked out all significant levels, you determined your short-term bias on 5-minute and 15-minute. Let's note that as well. You look for the most recent supply and demand areas on that time frame you will take entry, okay, on. So for me, that's always 5-minute and 15-minute. This is the time frame I marked out my supply and demand areas. An A plus setup for me is when I have a 5-minute and 15-minute supply or demand area at the same level. That's like a double confirmation for me to take that trade. So obviously we were in a downtrend, so I was looking for supply areas and not for demand areas. You will look for demand areas when you are in an uptrend. Okay, so for this case, I was looking for supply areas, and that was the third step. So you marked out all most recent supply areas. For me, that was this area, this green candle up here, then this one, and the third one after we got another break of structure continuation. That was my most recent supply area on 5-minute, and I was just waiting for the price to pull back into either one of these areas. As you can see, the price never pulled back into this area, neither the price pulled back into this one up here, but the price pulled back into the most recent green candle, which was this area right here that I marked out with this gray box. And as you can see, the price tapped into it and closed bearish. So this is the fourth step, pullback. And then the fifth step is you wait for that reaction. Let me write that as well. Reaction around area. So we got that pullback. That was a fourth step or a tap. I usually just call it a tap. Then the fifth step is you wait for a proper reaction. So around the supply setup, that should be a bearish candle closure. Let's write that down as well. Bearish candle closure. obviously on 5 minute, because we are looking for an entry on 5 minute. And then the last step is to take an entry. So as soon as you see that bearish candle closing, you hop on a trade without any hesitation, okay? As you can see, the price pulled back, it wicked out of this supply area, it closed bearish, and this is where I entered this trade. And you can hold a trade for either 1 to 1 or 1 to 2. I mostly aim for 1 to 2, ideally 1 to 3, but the market won't always give you 1 to 3 or even higher risk reward ratio. I like to be in and out of a trade as quick as possible. So most of the time I don't hold my trades for too long, but you are free to do that. As you can see, the price did consolidate a bit, I think for around 20-30 minutes, but as long as the price stays below that supply area, you don't panic, you don't close that trade, you just stay in that trade and you don't mess it up, okay? Because this will happen a lot of times. Ideally, the price will just pull back, it will react properly and just go straight to your TP. But this won't happen every single day. That is why I found this example from Wednesday really good to record this video, because this will happen a lot of times as well. And this is where a lot of supply and demand traders mess up, because they start to panic the moment the price goes into that area again, or it closes green after you enter the trade. So you don't want to mess up. You want to stay in this trade for as long as it stays below this gray box, below your supply area, okay? So as you can see, I was sitting through this trade for almost 30 minutes and it rewarded me with 1 to 2. This is actually where I exited. So, and I also trailed my stop loss when I saw this break of structure. When the price broke this low, I was trailing my stop loss a bit more tight. And yeah, the trade was A plus. As you can see, you gotta trust your strategy and you gotta stay in a trade for as long as it does not invalidate your areas. So if you like this short trade breakdown and you want more of it, please comment down below and let me know if you have any questions. I will now blend in the trade I took. I recorded it live, and I will also link my Discord chat. You are free to join. My Discord chat is free. You can join and just stay on track with my daily technical analysis, and also you can get notified when I enter a trade, when I exit a trade. You can learn and improve your supply and demand strategy with me and with other motivated traders. And I'll see you in my next video. Bye bye.